It's your November mortgage rate and housing update. Okay, so let's get into it. I waited till the end of the month because let's be real and honest about this. It was way too volatile around the election. I would argue we're still in the honeymoon phase after the election. You know, stock market, crypto, you're really seeing a boom in both of those categories because of the feeling that there's going to be less regulation and that it's going to be boom times, like roaring 20s, the good part, right? We'll see what happens. In terms of mortgage rates, yeah, they've been going up. Today they're down a little bit, and the reason they're down is because the bond market likes Bessent. Bessent is someone that Trump nominated to be the Secretary of the Treasury, okay? He's a hedge fund billionaire, and look, if anyone understands the market, it's probably a hedge fund billionaire. So that's not a bad thing, but he still has to officially get in. We still need the new administration to get in. We still need to see what their policies are going to be. And I would argue that until we see and that occurs, there's no stability. It's that simple. Everything right now is just people guessing what's going to happen next. And if there's one thing mortgage rates don't like, it's instability. So I would expect them to stay elevated, but to have some level of volatility based on what's being reported that the new administration's going to do, as well as global events. Okay? A couple things to keep in mind. Tariffs traditionally increase inflation. Inflation increases mortgage rates. War traditionally increases inflation. Inflation, mortgage rates. Stock market's doing great. Traditionally, rates are high. Stock market doing terrible, start to see lower rates. You know, recession, great for rates. But no one wants that. That's the thing. It's like sometimes you're picking between a roaring economy that's doing great or really low rates, because the two have not historically gone hand in hand, ever. Okay? I can't stress that enough. And that's what everybody needs to know, because the way the news has it, they're like, the Fed dropped rates, and everyone's like, is my rate? No, that's short-term rates. It doesn't even affect mortgage-backed securities, which ties into mortgage rates, right? So here's the thing. What can you do as a buyer? First of all, should you wait for rates to be 3%? If you want to rent forever, yes. Now, look, could having a billionaire hedge fund Secretary of the Treasury make it so that suddenly we can have a roaring economy and low rates? I mean, gosh, if anyone could, I would hope it would be them. But it's not something historically we've seen. So until we know what the new administration is going to do, what their new policies are, and who's actually going to make it to the final round, right? They've got to pass all that stuff to get in the cabinet. You're just going to have speculation and volatility. Now, as a buyer, you need to protect yourself. So the two things that I think are super important for the next few months are A, having the ability to lock your rate while you shop. Now look, am I suggesting that to every client? No, it depends on the loan type. There's some loans where the difference between a 30-day lock and a 90-day lock is barely anything. I would look at a lock-in shop in that situation. Or if they were very anxious or on the edge of qualifying, a lock-in shop is a really good idea. There's other loan categories where the difference between a 30-day rate and a 90-day rate is bonkers. So I would be less likely to suggest it in that case. Now, here's what you need to know. Not all lenders offer lock-in shops. Not all loan officers offer lock-in shops. It's a product that I used a ton in 2022 and 2023, the beginning of, and I'm really glad I did because it preserved affordability for my clients. So it's definitely worth a conversation with your loan officer. Ask if they have it, you know, and like, look, I have it. I may not suggest it. And if I don't, you can always say, Jen, why are you not? And I'll say, here's the difference, you know. And it could be something like, if you're going out on Friday and we're talking Friday morning, would I do a long-term lock-in shop? Probably not, right? Because generally a lock-in shop is going to be 90 days. The longer a lender holds the money, the more expensive the rate. So it could make sense. It's an option you want. It's that simple, okay? Do we charge for lock-in shops? No, there's no upfront fee or anything like that. So if you want to learn more about that, team number 786-933-2077. And yes, there are other loan officers that have a similar product, but ask them about it. Okay, what else? Rate renegotiations, so important. Because of the volatility, like my general leaning is going to be to lock the minute people are in contract. The reason I say that is because where I see the biggest disasters is when a loan officer told someone to wait to lock until the end, and then rates have gone up and the loan officer's like, oh, rates went up, and the person's screwed. I like to lock in the beginning unless there's some big reason not to. And then if rates go down, renegotiate. You know, we have the ability to do it once based on the loan product. You know, the rate would have to go down a certain percentage. There is a fee, but it's definitely something that can be worthwhile in a volatile market, which is what this is going to be. The key thing to think about is there's no stability. And if you're like, Jen, there is, really? Where? Like, find me some stability. I've been looking, like, geopolitics is not stable right now. You know, whenever you have an administration change, it's not stable, especially when you have so many positions that are very high up changing. There's a lack of stability. You know, is this bad forever? No, we could get great results from the changes, but this period's going to be volatile. So the key is to protect your affordability. Okay, housing. Look, we still don't have a ton on the market in most of the country. Now, are there places where we're starting to see some price drops because of inventory? Yes, it's going to be those areas where, you know, there's like 4 builders, there's a surplus of inventory. That's where we're seeing some level of price drops. Also, we're seeing buyers get sellers to help with closing costs. I'm seeing more of that across the country right now, which is great because buyers need help with closing costs. So I'm glad sellers waking up to that. Do I expect a huge housing crash? No, I don't. And it's for the simple reason the supply issue is still a problem in the bulk of the country. And there's talk about opening up federal land to do more building. And the key with that is great, but it still doesn't relieve the burden of the areas that already are super competitive because of lack of supply. New York, New Jersey, parts of California, you know, there are lots of areas in the country where there's nowhere to build, okay? So that will be interesting to see. I love November and December as like an investor, but also for first-time home buyers. I feel like you really have serious sellers right now. So you have less of the sellers that are testing the market on price and more people who really actually need to sell their house, which is always a benefit for buyers. For the sellers, it's great too because you have serious buyers right now. You know, no one wants to waste their Thanksgiving weekend looky-looing at houses unless they're serious about buying a house. So I do like the tail end of the year for that. Now, it just came out today, but the DOJ recently weighed in on the NAR lawsuit, and we might see more changes next year to the buyer's agreement. If you're unfamiliar with the buyer's agreement, check out my prior videos. The DOJ, I'm just gonna quote this, okay, because I don't wanna misstate. Please hold. This is an article about it. The agency also raised a concern about buyers' agent agreements, saying the provision that requires buyers and brokers to make written agreements before home tours may harm buyers and limit how brokers compete for clients. I agree with this. Okay, now look, they're not saying that buyers' agreements are banned, but they're saying, hey, these actually feel like they might hurt buyers, which I agree with 100%. And quote, it bears a close resemblance to prior restrictions among competitors that courts have found to violate the antitrust laws in other proceedings and could limit, rather than enhance, competition for buyers among buyer-broker, according to the filing. So I think that next year we're gonna see another change with the buyer's agreements, and I'm really happy about this. I think the DOJ is really paying attention to the needs of the American home buyer, and that's important. So it'll be interesting to see what happens with that, but that's great news to hear. Just because I've heard some pretty rough things about some of the buyer's agreements. You know, there's certain parts of the country where we're really not seeing the competition that people had hoped, and it'll be interesting to see what happens next. So look, here's the deal. Mortgage rates are going to be volatile. I'll do an update in December. It's probably going to be the exact same thing because once again, until we have the new administration in, we know what their policies are, and we have an idea how it will affect the economy overall, it's going to be a wait and see. You're going to have emotional up and down based on what the news is reporting, and people are speculating on any given day. Does this mean you should wait? No, it means if you find a house that you like, if you can comfortably afford it, fantastic. Don't buy a house just to buy a house. Don't stay away from the housing market waiting for stability because realistically, it's probably not going to happen anytime soon. So I hope this video was helpful. If you have questions, comments, or you want to reach out, ask about Lockin Shop, ask about rate renegotiations, give us a call, 786-933-2077. If you want to watch rates and see what's going on, mortgagenewsdaily.com. Thanks for watching, guys.